Alright, let's take a moment to really process what we've just been talking about, because this is one of those topics that cuts straight to the heart of why so many people struggle to build lasting wealth. We've been having a conversation about the noisy, chaotic, emotionally charged world of stock market investing. And specifically, we've been deconstructing the seductive, almost hypnotic appeal of the next big thing. We talked about how the financial media is built on a foundation of hype, how they know that fear and greed are the two emotions that drive engagement, and how they deliberately amplify stories about soaring stocks, overnight millionaires, and the latest can't-miss opportunity. We explored the psychology of FOMO, the fear of missing out, and how that primal fear is one of the most powerful drivers of poor financial decisions. We talked about how our brains are wired to respond more strongly to the fear of loss than to the promise of gain, and how that cognitive bias gets exploited every single day by news outlets, by stock-picking newsletters, by experts who are really just salespeople in disguise. We talked about the dopamine hit of checking your portfolio constantly, the roller coaster of emotions when you're chasing hot stocks, the sleepless nights when the market dips, and the frantic, panicked selling that locks in losses and destroys wealth. And then we flipped that script entirely. We introduced the alternative, the boring strategy, the approach of the ultra-wealthy, the people who have actually built and sustained massive fortunes over decades. We talked about the philosophy of legendary investors like Warren Buffett, who famously said that his favorite holding period is forever. We talked about the concept of capital preservation, the idea that the first rule of investing is not to lose money, and the second rule is to remember the first rule. We talked about how wealthy investors don't get excited about hot tips or trendy sectors. They get excited about durable businesses, predictable cash flows, competitive moats, and long-term compounding. We talked about how boring investing is actually the most exciting thing in the world, if you understand what true wealth creation looks like. It's slow, it's steady, it's unglamorous. It involves buying solid companies or diversified index funds and then doing absolutely nothing for years, sometimes decades. It involves ignoring the daily noise, the market fluctuations, the talking heads on television who need to fill airtime with something dramatic. It involves having the emotional maturity to watch your portfolio drop by 30% and feel nothing, or even feel excited because now you can buy more at a discount. But here's the thing, and this is where we need to shift from audio to visual. All of this talk about boring investing, about patience, about ignoring the noise, it's all intellectually sound. It's philosophically powerful. And if you've been listening closely, I hope you've already started to feel that shift in perspective, that quiet revolution in how you think about the stock market. But there's a difference between understanding the concept of boring investing and actually seeing it demonstrated with real numbers, real data, real charts that show the undeniable mathematical superiority of this approach. And that's exactly what we're going to do right now. I'm going to transition from audio to visual and bring up something that I think will fundamentally rewire how you think about investing. A side-by-side, visual comparison that pits the exciting, fast-paced, hot stock-chasing strategy against the boring, steady, patient approach of the wealthy. You're going to see two portfolios on your screen. One is driven by emotion, by FOMO, by chasing the latest trends. The other is driven by strategy, by discipline, by a long-term horizon. And you're going to watch what happens over time. And I mean real time, not some theoretical simulation, but actual historical data that shows exactly what would have happened if you had invested in the hot stocks versus the boring stocks over the last 10, 20, 30 years. The results are jaw-dropping. They are counterintuitive. They defy everything that the financial media wants you to believe. The boring portfolio crushes the exciting portfolio by a margin that is so wide, so dramatic, that once you see it, you can never unsee it. I'm also going to put up a visual breakdown of the actual holdings of a typical ultra-wealthy investor's portfolio. Not the flashy stuff, but the mundane, unremarkable companies that quietly generate enormous returns year after year. You'll see the names, the numbers, the dividend yields, the price-to-earnings ratios. And you'll start to understand why these investors sleep peacefully at night while the rest of the world panics about market corrections. And I'm going to show you a chart that visualizes the emotional journey of an investor in each strategy. The hot stock chaser experiences massive highs and crushing lows, a jagged, chaotic line that looks like a heart attack on paper. The boring investor experiences a smooth, steady upward slope. Not dramatic, not thrilling, but relentlessly upward, compounding over time. And when you see those two lines on the same graph, side by side, the decision about which strategy to adopt becomes the easiest choice you'll ever make. I also want to show you a visual simulation of what happens when you panic sell during a market downturn versus when you hold steady. You'll see the actual dates, the actual prices, the actual losses that get locked in versus the gains that get realized by those who have the patience to wait. This isn't theoretical. This is real market history, and I'm going to walk you through every single visual data point so you can understand exactly why the wealthy stay wealthy while everyone else chases their tails. So I'm going to change the format right now. I'm going to move from audio to full visual mode. I'm going to bring up the charts, the comparisons, the historical data, the visual evidence that proves beyond any reasonable doubt that the boring strategy is the winning strategy. This is not opinion, this is math. And once you see the math on your screen, once you visualize it, you will never feel the urge to chase a hot stock again. All right, let's do this. Let's transition to the screen right now and show you exactly what wealthy investors do differently and why boring is actually the most exciting thing you can be with your money. Get ready to see the numbers that will change everything.